What's up, Money Minds, and welcome back to another video edition of Market Briefs. Today is December 6th, and here's some business and financial news you can finally use. At the beginning of December 2021, Bitcoin and other cryptocurrency markets kind of went into a crash. We saw the price of one Bitcoin go from around $57,000 all the way down to around $40,000. That means that the Bitcoin market alone lost around 15% of its value. And a lot of the other cryptocurrencies, big ones like Ether, Dogecoin, and Shiba Inu, followed suit. Now, we all know that the cryptocurrency market is very volatile. We can see the price of Bitcoin and other cryptocurrencies go way up and then dramatically fall, all in the span of a few days. However, this was a complete crash in the cryptocurrency market. So what exactly happened here? Well, today we're going to talk all about this December 2021 cryptocurrency crash, what exactly happened, and what could that mean for the future of cryptocurrencies. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube can show our videos to way more money minds around the world. We can keep making videos just like this one. Cryptocurrency has been on a massive run over the last 2 years. We saw the price of one Bitcoin go from around $7,000 in January of 2020 all the way up to over $65,000 in November of 2021. And there is a few different reasons for this. For one, the technology and interest around cryptocurrencies has been steadily rising over the last decade. Of course, Bitcoin was the first major decentralized cryptocurrency to hit the market, and ever since, it has been the world's dominating cryptocurrency. However, there has been thousands of new cryptos that have hit the market, and most of them are all hitting the market over the last few years. As the market continues to expand, the technology surrounding cryptocurrencies is going to expand too. The interesting thing about cryptocurrencies is that there is no central governing body. So unlike our traditional money, where the United States government controls all of the monetary supply, they can print as much as they want, Bitcoin, Ethereum, and a ton of other cryptocurrencies are not controlled by one agency. They're controlled by the people. And this has a lot of advantages. For one, Bitcoin is a natural hedge against inflation, meaning that it protects investors' money against inflation, which means rising prices and a devaluing dollar. The reason for this is because there's a limit to how many Bitcoins can be created. I believe it's 21 million Bitcoins that can be created, and once you've reached that limit, no more can be put on the market. So if Bitcoin continues to have value, the price of one Bitcoin should continue to rise. That's because there's only so many. If you have a high demand of something but only a limited amount of supply, then that means the price of that asset is going to go up. Our traditional US dollars are not like that. The Federal Reserve can decide at any point that they want to print an additional $1 trillion. Printing that much money over a short period of time means that the value of your money is going down. With every single dollar that you print, the buying power of every dollar in circulation starts to decrease. That's how inflation works, because now there is a lot more money circulating throughout our economy. And when people have more money, they tend to go out and spend more. This means that businesses need to produce more, which means rising prices. Bitcoin and cryptocurrencies, on the other hand, do not fall under that same umbrella. There's a possibility that they can protect investors from inflation because they have inherent value. And that's the other interesting thing about cryptocurrencies, is they have the same value all around the world. Their value is universal. They function a lot like gold and some other commodities in this way. If you have an ounce of gold, it's going to have the same value all around the world. The same can be said for Bitcoin and other cryptocurrencies. That means investors and companies that want to utilize Bitcoin don't have to exchange traditional money first before making a purchase. And there is a lot of other reasons why cryptocurrency has rose over the last few years. But in 2020 particular, Bitcoin and other cryptos started to explode. We saw more interest and more money begin to pour into these markets than we have ever seen before. And the reason for this is because a lot of investors were taking their money from the stock market and moving it into different assets in order to protect from inflation and a market crash. When the pandemic took off in March of 2020, we saw the stock market essentially crash. Millions of investors were pulling their money from stocks and ETFs and any investments that they had in order to protect them. This is because they were predicting the country entering a tough economic time. And what was worse is they had no idea how long this economic crisis would last. Everything pretty much shut down during this time, and it meant that businesses were going to get a lot less money. Because a lot of industries were closed down, this meant that people couldn't work, and if they're not working, they can't really spend a lot of money. And right off the bat, there was a lot of inflation fears because the Federal Reserve and the United States government was promising that they were going to print trillions of dollars in economic stimulus in order to lift the country out of this recession and pandemic. Initially, this kind of economic stimulus really helps the United States economy, and it really helps Wall Street because that means there's billions and sometimes trillions of dollars pumping back into the economy, even though people aren't really working. Like I said, that can create economic problems later, but in the short term, that keeps your economy going. And it means that businesses and profits can continue to still come in because people have money, even though they're not working. So you had a good portion of investors moving their money from the stock market into cryptocurrencies as a way to protect against inflation because nobody really knew how much money the United States government was going to print. They ended up printing around $3 to $5 trillion, but ultimately that means that the value of our US dollars is going to go down. So they want to put their money into something that isn't going to go down, so investors invest in other assets like cryptocurrencies. And digital payments have been growing for a long time now as people have been shifting to buying things in person to buying things online. So it almost felt like a natural progression for cryptocurrencies to start. We also saw a bunch of other tech companies and tech in general explode over the last 2 years. Suddenly, there was a need for more tech in our lives. As people were starting to stay home, they needed computers. And as kids stopped going to in-person learning, they started learning from home. We needed a lot more technology in order to function as a society. And even by December of 2021, nobody really knows what direction this pandemic is going to take. So businesses are starting to invest billions of dollars into ways to help mitigate the effects of the pandemic. They know people don't want to be face-to-face anymore, and they know that people want a lot of these contactless delivery services. So they're investing to bring that to light. But all of that costs money too, and it's going to eat into company profits. So people move their money around and start investing in things that are going to continue to make them money even when the stock market and profits begin to fall. And from a financial standpoint, things started to look pretty good in the United States. The Federal Reserve was printing so much money that people had money to spend. This meant that businesses were reporting record profits even though we were in a recession. So the stock market and cryptocurrency began to boom. People had so much extra money, and the Federal Reserve came out with a bunch of other monetary policies to help push up the economy. This allowed so much extra money to begin circulating throughout our economy that people took on a lot more risky investments because they had so much money. Cryptocurrency is considered a risky investment because it is so volatile. It has massive price swings. However, if you have extra money to spend and buy cryptocurrency, well, then you're going to use that extra cash, and even if you lose it, it's not really that big of a deal. And for the most part, the cryptocurrency market continued to rise all throughout 2020 and in 2021. There were periods where it dropped, but it always seemed to recover. However, this crash in the cryptocurrency market is a little bit different than what we've seen in the past. Most notably, it's also coinciding with some stock market drops as well. And before I get into those drops, you have to understand one more thing about the cryptocurrency market. As a whole, a lot of them function off of the blockchain technology. And a lot of the people that invest in cryptocurrencies invest in Bitcoin. Bitcoin is kind of the staple for the cryptocurrency markets. So if Bitcoin begins to rise, you'll see a lot of the other coins around the world begin to rise too. However, if the opposite happens and Bitcoin drops in value, then a lot of these other cryptos will drop too. And if Bitcoin starts to lose some of its credibility or value, then a lot of investors start to get worried about what that could mean for other cryptocurrencies and start to sell. And when you have way more people trying to sell Bitcoin or a stock than there is people willing to buy this asset, well, that can lead to a crash. And it's what we saw at the beginning of December 2021. Cryptocurrency investors started to sell off their crypto for a variety of different reasons. For one, a lot of them were trying to just take advantage of the profits that they were receiving. This can sometimes happen near the end of the year or near the end of a fiscal quarter. Investors, whether it be long-term or short-term, want to see profits from their investment. And because it's towards the end of the year and Bitcoin was around $57,000 to $60,000, they wanted to take advantage of the money that they could receive right now if they sell their Bitcoin. However, is there some kind of secret club amongst cryptocurrency members to where they all said they were going to sell their crypto at the same time? Well, not exactly. So what can typically happen is a group of cryptocurrency investors who are willing to now take profits from their investment will start to sell off that asset. Now, if this happens in too large of a number, you will see a bunch of other investors start to sell their asset too for particularly no reason, other than that they're afraid that it will continue to drop more. It's not super uncommon and it can often lead to a very slight correction, but that is not the only reason why we saw a ton of cryptocurrency investors start to sell their crypto in the beginning parts of December. For that particular weekend, this was just a week off when some key crypto brokerage CEOs were going to testify before Congress. And the reason they're testifying before Congress is because Congress is looking for new ways to start taxing cryptocurrencies more. In particular, President Joe Biden officially passed his $1.2 trillion infrastructure bill. One of the proposed ways of paying for this $1.2 trillion bill is to begin taxing cryptocurrencies more. Now, they didn't really give any specifics on that, and later they talked about setting up an entire team to figure out how taxing cryptocurrencies would work. But nothing has been decided yet, but this meeting that could happen in the middle part of December may begin to decide how regulators start taxing crypto. So depending on what these crypto brokerage CEOs say, that could send markets down or way up. So in order to avoid that and lose money, a lot of cryptocurrency investors sold their investments just to get a profit right now. The Federal Reserve also plays a key role here, because by late 2021, the Federal Reserve has admitted that inflation is way too high and that it may no longer be transitory. What this means is that this level of inflation may last a lot longer than even they had anticipated. Prior to this announcement, they talked about tapering their bond buying and asset purchasing on Wall Street by $15 billion every single month until the middle part of 2022. They were able to do this because in their eyes, the stock market is starting to recover from its crash back in 2020. For the most part, investors pretty much knew that tapering was going to happen at some point. I mean, the Federal Reserve has to exit the market eventually, so they knew it was coming. Inflation is higher than they were anticipating, so they're now starting to talk about pulling their asset purchasing even faster and tapering even more. The stock market did not like that. And in conjunction, the cryptocurrency market didn't like that either. This is because a lot of the investors that are on Wall Street also invest in cryptocurrency. And with a lot of that extra stimulus and extra money being pulled from the New York Stock Exchange, these investors have less money to invest in crypto as well. And the reason the Federal Reserve did this in the first place was to boost up the stock market. They wanted to pour so much money so that the stock market didn't crash again, because they figured that with all of our industries closing down and people not making any money, they will not have additional money to put into the stock market. And even though they were printing trillions of dollars in stimulus, extended unemployment benefits, and direct checks to Americans, sometimes worth thousands of dollars, there was no guarantee that people were going to invest this money. Now, people ultimately did invest a good portion of this money. We saw the stock market hit new record highs in 2020 and in 2021. We saw saving rates go up too, so people went out and saved this money, and additionally, people spent this money. but there's no guarantee on what people are going to do once you give them this stimulus. That's where this bond buying and quantitative easing came in. The Federal Reserve is essentially entering the market and starting to buy corporate bonds in order to help out all of the businesses on Wall Street. They did this for a long time, but with inflation getting way out of hand, the Federal Reserve has to pull back this tapering even faster, or else it risks raising inflation even more. In the CPI report for October of 2021, inflation reached a new record high of around 6.2%. That is the largest amount of inflation this country has seen in well over 30 years. A lot of that has to do with all of the money that the Federal Reserve has printed over the last 2 years. But again, this was all to incentivize people to spend money. The other thing the Federal Reserve did was drop its benchmark interest rates to near 0%. This made it a lot easier for people to go out and borrow money, which means a lot more people were spending more money too. With interest rates so low, people could go out and get a loan that they might not have been able to afford before. That affects loans in general, and it also affects the cryptocurrency market because some crypto investors trade on margin. Margin trading is pretty complicated, but essentially you are getting a loan or borrowing money in order to make a trade today, and eventually you'll have to pay all of that money back. There is an interest rate tied to that. And with interest rates so low, a lot more people could enter the cryptocurrency market and start trading Bitcoin or Ether with borrowing money. But the Federal Reserve today is worried about inflation. They have talked about raising their benchmark interest rates as well. This would mean a lot fewer people have access to buying Bitcoin. So with this crash that we saw, investors are worried that if the Federal Reserve starts raising interest rates too quickly, that means less people will trade and buy Bitcoin on margin. And in general, these economic policies could push people to spend money even less. And while that could be good for inflation, it's not good for markets in general because now you have less money going into these markets. And again, this crash and the timing of it wasn't as random as you think it is. Because the very next week, the Federal Reserve is planning to now have a meeting about inflation and its monetary policies. It will decide exactly how much it's going to taper, when it will stop its asset purchasing altogether, and how many times it's going to raise benchmark interest rates, all in this December meeting. In addition, this is a brand new month, so the Consumer Price Index, or the CPI, is also going to be released. This will show how much inflation is beginning to rise from November to December. If it continues to go way up, then the Federal Reserve is going to have to get a lot more aggressive with its monetary policies in order to curb inflation. This is in part why we saw the stock market begin to drop too during the exact same time. And it's why the cryptocurrency market is dropping now. And finally, nobody really knows where this pandemic is going to go next. The United States has now confirmed multiple cases of the new COVID variant, Omicron. And at this point, experts aren't really sure the efficacy of our current vaccines. So we don't know if the world is vaccinated against this new variant. We also don't know how powerful and strong this new variant is. This fact alone has given investors all throughout the world complete whiplash. They know what happened back in March of 2020 and they want to avoid it this time around. So if this new virus becomes powerful, they know markets are going to go down. So they pull their money out early. Realistically yet, we don't know if this new variant is going to be a massive factor in markets throughout the world. However, a lot of the times investors trade their money based off of emotion. And if investors are scared, you can see a correction or crash on Wall Street and in Bitcoin and even in the real estate market. If investors are optimistic, you will typically see markets rise. And I want to leave you with this regarding the cryptocurrency crash. Crypto is an emerging market. I mean, Bitcoin was first released back in 2009. That is not that long ago. So because it's so new, it has to work out a lot of the problems that the stock market and real estate market have already worked out. But what it also means is that there is a ton of beginner investors into this field. Beginner investors that want to make a profit with Bitcoin and other cryptocurrencies but don't really know what they're doing yet. So when they start to see Bitcoin drop in value, they get scared and they want to save their money. And with so many new investors coming in, they haven't really felt the effects of crashes before. They don't really know about the crash that happened in 2017, and they don't really know about the crash that happened earlier this year. Everybody in this market is still learning about cryptocurrencies, and because of that, you're going to see a lot of these things happen. So in short, nobody really knows what's going to happen with the cryptocurrency market in the near to distant future. Most experts believe that it will continue to be volatile, as we're not really sure how regulation is going to work or what the Federal Reserve is going to do regarding inflation, its tapering, and interest rate program. All of this affects our money, and there's consequences to every decision. Ultimately, investors know that, and they also know that there is a very bright future for cryptocurrencies. So while things may be extremely volatile right now, they're willing to take on that risk because crypto may become the most powerful asset in the future. And for cryptocurrency veterans, crypto has crashed before. Many of those investors have lived through that, so they know crypto's probably going to crash again. Booms and busts in a market are completely normal, which is why you saw the price of Bitcoin start to rise even after it crashed. As of today, one Bitcoin is trading at around $50,000. Still down from where it was just a few short days ago, but it has recovered from its $40,000 price point. These things tend to happen, and it looks like veteran cryptocurrency investors are just trying to ride it out, at least right now. But now I want to hear from you on this issue. How do you think the new Omicron variant and the Federal Reserve will affect cryptocurrencies in 2022? Will this new virus variant and the Federal Reserve policies essentially crash cryptocurrencies for the long term? Or like crashes of the past, this too shall pass? Whatever your thoughts are, leave a comment below before you go. But that is it for today's Market Briefs video breakdown. Thank you so much for watching. If you liked this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.